Hi guys, welcome to Gold Today. This video is brought to you by the coach. Remember, always our job is to make you rich. If you are a new subscriber, welcome aboard and thank you for joining us. If not yet, please hit the subscribe button. We are going to start our video with the economic calendar. On the economic calendar for the coming week, we are waiting for the following economic headers to be released from the United States. We are waiting for the housing starts and building permits and the manufacturing PMI and the services PMI, and there will be a few speeches for a few FOMC members to be delivered throughout the week. That's all for the economic calendar. We'll move on now to the numbers. On the last week, gold spot traded from 1445 to 1474. Numbers are rounded and the market is closed. Gold spot printed a closing price on the last trading session of Friday about 1467. The number is rounded and the market is closed. Gold is trading in an uptrend and it's above only the 200 days daily simple moving averages, and the momentum is seen weakening. We talking about the RSI readings. It's moderate on all the charts. It's 41 daily, 53 weekly, and 62 monthly. For the supports, it's 1450 followed by 1428 and then 1411. For the resistance, it's 1488 followed by 1500 and then 1517.8. That's all for the numbers. We'll move on now to the trading strategy. Hi again. As a start, the market of gold and silver is unfortunately once again being manipulated by the market makers. The market all of a sudden is putting huge focus on the trade deal, which is a very small deal, not the one that Trump was promising to deliver, and it's struggling even to see the light so far. On the other hand, the Fed is still printing money and injecting market with tons of cheap dollars used basically to keep the bubble and the Wall Street from bursting and to show how much damaged is the US economy. Also, tension with Iran and tension in Hong Kong and other places, which could break down the relationship between US and China, especially the Hong Kong one, is seen by the market participants with a blind eye, unfortunately. And the scenario of 1929, the Great Depression, is repeated. Literally, money is migrating away from the hard money, gold, silver, and other hard forms of money and commodities in general, to speculations into financial markets, and this won't end up nicely because we have experienced this, as I said, in 1929 and so many other occasions, and it's always points to a collapse or a financial crisis ahead. Technically, gold is trading in an uptrend and it will stay in this uptrend as long as gold is trading above 1450. Now gold is below the 20 days, 50 days, 100 days daily simple moving averages, and there are about 337,000 future long contracts which awaits to be closed before expiry by end of November, which means that we have 10 days with an average of 30,000 contract going into sell side. With this in mind, gold could dip further toward the 200 days daily simple moving average, about 1411. And the 50% Fibonacci retracement is located also in that area. Also, gold is expected to catch a bid ahead of the FOMC meeting in mid of December. And speaking of this area, 1400 to 1411, also there is a gap nearby 1360. It could be closed through an intraday trading. From there, gold should be ready actually technically to rally to 1700 or even 1900, depends on the size of the damage in the financial markets or on the intentions of the Federal Reserve Bank. All of this can be neglected only if gold closes above the 50 days EMA, which is located above 1488. So the conclusion is sell after a close below 1450 with a target of 1390, and buy with a close above 1488 with a TP or target opened. For silver, accumulate from 16.4 to 16.7. That's all. Thank you guys for watching this video. I'll see you next week in another video.